Hey all, welcome to ShareTreck. This is Raj here. Friends, today I'm going to talk about a question that keeps on coming up in my mind. And I think if I don't get the answer to that question in time, I might probably lose a huge opportunity, once in a lifetime opportunity. And I bet each and every one of you has the same question for which you're looking for answers all over the place. And probably even if you get the right answer, you may not be convinced that it is the right answer. What am I talking about? Well, I'm talking about when exactly should you buy CRISPR or any other genomic company stocks. There's a whole lot of consideration into it. I have done my homework on this, and today I'm going to share my thoughts on exactly what I think I might do. And I would like to get your feedback so that you can point out any flaws in my logic, and we can help each other out with thinking through this. That said, let's get started. Welcome back, friends. Investing in the genomic sector, particularly in companies like CRISPR Therapeutics, Beam Therapeutics, Bluebird Bio, and Editas, presents a unique challenge for investors. Many of these pioneering firms operate in stealth mode, making it difficult to obtain timely updates about their clinical trials, progress in licensing deals, or key collaboration milestones. And this lack of transparency creates a complex investment landscape that demands careful consideration. And now, before you say that these companies are all compliant to SEC regulation and they do all the disclosures and everything, let me assure you, I'm not complaining that these companies do not communicate. What I'm talking about is that we do not have, as retail investors, we do not have information about how their clinical trial is progressing. We do not have information about how close they are to strike a new deal with a big pharma for select targets for which there will be milestone-based payments. We do not have information about when they are going to get a milestone payments for anything that they have done for a big pharma partner. So these are the kind of things I'm talking about. And that kind of information is worth its weight in gold, because that's what will move the market either up or down, right? So if there's a therapy in clinical trial, there are two possibilities. One is that it's doing very well and proceeding ahead, or the second is that it's not doing very well, so it's going to be put on hold or it's going to be discarded. The first opportunity is that it's doing very well. In that case, the share price will go up. And in case that therapy is being halted or discontinued, then that will push the share price down. And this is very, very material catalytic information. And those people who get that in advance can make a killing. They can make a huge amount of money even in these times. So we as retail investors do not have that information. By the time the information comes to us, it's rather late and we can't act on it because it's too late to act. And we have very little benefit to make out of this. That's what I mean when I say these companies are operating in stealth mode. The stealth mode operation of genomic companies has significant implication for all the investors. The shares of these companies often languish, awaiting significant catalysts. When a breakthrough or a milestone is announced, the stock prices can spike dramatically. This volatility means that timing the market is nearly impossible. And this requires investors to hold their position in anticipation of these rare but impactful events, that a sudden catalyst is going to come and the stock is going to go up by 40%. Now, that's the kind of sentiment that makes genomic investors hold on to their share despite the share price keeping on going down. And I would say that most people are navigating the genomic space blind and with only hope as their guiding light. Investors essentially are navigating blind, hoping for a substantial payoff. The unpredictability of breakthroughs means shares may suddenly elevate in price and remain there until the next major catalyst, or they may have gone up on a false rumor and then they will fall down again. So it's very, very volatile. And to avoid missing these opportunities, many investors choose to stay invested despite the uncertainty. And some even go to the extent of dollar cost averaging on the way down, which is traditionally called as catching the falling knife, because if you try to catch a falling knife, it's going to slice through your fingers because it is sharp, right? So the pain involved in catching a falling knife is equal to dollar cost averaging without being absolutely sure that the price is going to turn back up again and you're going to make up the money. So that's what I'm talking about. Investors must weigh the potential high returns of genomic stocks against the opportunity costs of not investing in other high growth sectors like artificial intelligence, etc. And I would like to propose a few considerations here. Investing in genomics means locking in capital that could otherwise be allocated to other high return opportunities such as AI, which is currently experiencing rapid growth and innovation. The question remains whether the eventual gains from genomic stocks will surpass the returns lost from these missed opportunities if you had stayed invested. What I did was I took out money, I took profits from CRISPR, and I parked it into FNGU, and I made a lot of money. Right now, half my money is still stuck in FNGU, but I have enough to buy 100 shares of CRISPR. And I'm thinking, is it the right time to buy? I don't think so. I'm going to wait a little more. And that's what I'm talking about out here in terms of missed opportunities. If I had not invested in FNGU, I couldn't have been able to multiply the amount of money that I had in CRISPR twice over because it would still be sitting in CRISPR Therapeutics and not gaining much value. So that's what I'm talking about in terms of opportunity cost. The optimal time to enter genomics market is still unclear. A case-by-case approach is advisable. With companies like CRISPR Therapeutics and Editas presenting early opportunities due to their monetized assets and monetized platforms, they are less risky. Other genomic firms require vigilant monitoring as news about milestone payments and partnerships is often delayed or undisclosed. Retail investors face significant challenges in valuing genomic companies due to a lack of specialized knowledge and detailed information about the therapies in their pipelines. Current pricing for most genomic firms is relatively low, adding to the complexity of making informed decisions. So in conclusion, I will say that CRISPR Therapeutics and Editas appear to be more promising early opportunities, potentially offering more immediate returns. Investors might consider focusing on these firms while maintaining a broader watch on the sector. Investment in other genomic companies require careful thought and continuous monitoring. The stealth nature of their operation means that significant developments can happen without prior notice, impacting stock prices suddenly. So in summary, I would say that genomic investments offer the allure of significant paydays. They come with high uncertainty and opportunity costs. So I would say that investors would need to strategically balance their portfolios, possibly favoring companies with more transparent progress and clear monetization paths, and also at the same time be prepared for the long haul with the rest of the sector. The landscape demands a dynamic and informed approach, balancing the potential for high returns with the risks of minimized opportunities in other burgeoning fields. Therefore, I think institutional investors are likely to fare much better with genomic companies than retail investors. However, there is still money to be made for retail investors if you have infinite patience and if you're not looking at the opportunity cost of staying invested and riding the roller coaster of high and low prices in these genomic stocks. And now coming to my own thought process, the only companies that I find worthwhile to invest in the next 15-20 days if I want to put the money are CRISPR Therapeutics, and the next choice would be Editas because they have got this platform revenue. So if any company uses CRISPR-Cas9 and develops anything before they monetize, they will have to buy a license from Editas. So that's why I think I would select Editas. So with that, I think I can probably conclude this video and invite your feedback. Please let me know how you look at this field, and if you find any flaws in my reasoning, just mention that in the comment section. I like to get your feedback. I value your feedback, and many times I get to learn new things when you comment on any videos. So that said, I think I'd like to bring this video to an end, and I'll catch up with you in the next video. Bye for now.